Bitcoin is stuck. Around 64,000. Crypto fear and greed is at 22. Deep fear territory. Total crypto market cap is 2.18 trillion, down from the highs, drifting sideways. But crypto stocks? Different story entirely. Hood is up 48% since May 1st. Coin bounced from its June lows. CRCL is consolidating, building a base. The stocks are running ahead of the asset they're supposed to track. That divergence is the trade. Let me walk you through what's driving it and which name has the best risk-reward from here. New here? Subscribe. Free note in the description. The catalyst that matters most right now is regulatory. The SEC under Paul Atkins is reportedly considering allowing tokenized stocks, blockchain-based versions of traditional equities, with 24/7 trading and instant settlement. Reuters reported it. The market is pricing it. This is not a crypto-native story. This is a market structure story. If tokenized stocks become real, every crypto platform with U.S. brokerage capabilities becomes a potential exchange for tokenized equities. That rewrites the addressable market. Coinbase isn't waiting. They announced they'll launch one-to-one, physically backed tokenized stocks. You can trade, hold, and redeem on-chain. Coin is making the first move. But the stock barely reacted Thursday, down 1.01% to 163.26. Volume was 9.8 million shares, below its recent average. The market isn't convinced yet, or it's waiting for execution, not announcements. Robinhood is the one that moved. Hood closed Thursday at 108.15, up 2.80%. The day before, up 8.78% on 70 million shares. Record June volumes in stocks, options, and prediction markets. 27.7 million funded customers. A product pipeline that includes a prediction market exchange, an AI tool with over 1 million users, banking with $20 billion in deposits, and Trump accounts for miners. Hood is not a crypto pure play. It's a platform. And the market is rewarding platform breadth over crypto purity. Circle is the third name. And the most different. CRCL closed Thursday at 80.23, basically flat. Down 0.45%. Volume was 14.9 million shares. CRCL is the USDC stablecoin issuer. 96% of its revenue comes from reserve interest. It's a rate-sensitive balance sheet business, not a trading venue. USDC circulation hit $770 billion, up 28% year over year. Chain transaction volume surged 263% to 21.5 trillion. The fundamentals are strong, but the stock hasn't broken out yet. Circle is also building ARC, its own Layer 1 blockchain where USDC is the native gas token. That's a long-term infrastructure bet. If ARC works, Circle goes from being a regulated stablecoin issuer to owning the rails that stablecoin finance runs on. But that's a 2027 to 2028 story. The market is focused on what's happening now, and right now, Circle's earnings are rate-dependent. If the Fed hikes, reserve yields rise and CRCL benefits. If they cut, the revenue engine decelerates. That's a macro call, not a crypto call. So where does this leave us for trade setups? Hood has the best momentum, but the most extended chart. Up 48% since May 1st. KDJ overbought, above upper Bollinger. I like it, but I'm waiting for a pullback to 101.03. Stop at 95. Target 120, 125. Risk-reward is favorable on a dip. Chasing at 108 is buying the top of a move. Coin has the most asymmetric setup. At 163, it's well below its 52-week high. The tokenized stock launch is a concrete catalyst, not a rumor. If execution matches the announcement, coin re-rates. Entry zone, 155, 160, on any post-FOMC hangover weakness. Stop at 148. Target 185. The next resistance level, risk, execution risk is real. Tokenized stocks are not live yet. Announcements are cheap. CRCL is the most conservative. $80, flat, building a base. Rate sensitive, but with a growth catalyst in ARK. Entry, 76, 78 on any weakness. Stop at 72. Target 90, retest of prior resistance. This is a lower volatility play. It won't rip like Hood. It won't dump like coin on a bad earnings call. It's the utility play in a speculative sector. Risk across all three. Number 1. Bitcoin correlation. If BTC breaks below 60,000, all three names sell off regardless of company-specific catalysts. Crypto stocks trade with crypto. That's the price of admission. Number 2. Regulatory execution. The SEC tokenized stock proposal is a proposal. EU anti-money laundering rules in 2027 will mandate KYC for $1,000 plus crypto transactions. Regulatory tailwinds and headwinds are arriving simultaneously. Number 3. Rate sensitivity. CRCL's earnings are directly tied to the Fed. Hood and Coin have rate-exposed net interest income. If Warsh hikes, that helps their interest revenue, but hurts crypto sentiment. Catch 22. One question. Hood momentum, Coin catalyst, or CRCL stability? Which crypto stock fits your style? Drop it in the comments. The sector has a genuine structural catalyst in tokenized equities. The names are running at different speeds. Position accordingly. You know the drill. Subscribe, hit the bell. Free note in the description. Trade safe.